Well, it's a new day and a new all-time high for gold. Are you surprised? Well, I certainly am not, but it seems like gold just does not want to quit to the upside. In today's video, we'll be talking about metals, we'll talk about the dollar, we'll talk about the indices as well, and where the most opportunity actually lies in this market. And maybe more importantly, what do you do with the price action here on gold? Do you sell this chart? Do you buy this chart? Let's talk about it. In recent videos, we've discussed the overbought status of gold and how that has been a terrible predictor in recent times that the chart needs to pull back. In fact, in the last several instances of an overbought status in gold here on the weekly chart, for example, let's just pull this up and take a look at the weekly chart from a bigger picture standpoint. Each time that we've gotten an overbought reading, it's actually been a pretty good indicator that the chart is going to continue higher. So will we see that repeat function here with the latest overbought reading? Clearly gold has had a huge breakout and many traders are wondering, is this due for some sort of correction and should we be selling this move? But again, look left and take it for example, if you were to have sold this candle, we just went higher. And then again, we went higher and let's say you said, well, this looks overbought, and then it kept going higher. And eventually it had a tiny little pullback, but ultimately it really never came back down. In fact, it continued higher, got overbought again, and boom, up it went. The point is, when something has a really good fundamental reason for moving higher, it can go up and up and up and completely seemingly ignore the overbought technical readings that chartists focus so heavily on. And this is why I often say that fundamental analysis is king when it comes to trading. We have a very scary reality that is settling in the US markets, which is showing that jobs data, which we can see right here as summarized by a looking pretty empty meter here. Basically, we had last week's NFP report, which came in really weak compared to expectations, ADP numbers, job openings, and jobless claims. Our jobs data came in really poor. And so this is a fundamental force that is driving gold higher. So why do jobs data points matter so much to gold? Well, it's because it impacts the bond market expectations for rate cuts, which we are now seeing pretty much a 100% chance that the Fed is going to cut rates in September in just over a week's time. In fact, now we see just about a 12% chance that we're actually going to get a 50 basis point or 0.5% rate cut in September, with an 88.2% chance that we are going to get a 0.25% rate cut from the Fed. But what makes gold even more bullish is that inflation is back on the rise here recently, with a couple months in a row of higher data points for CPI. Granted, this is lower than market forecasts have been with the red dot, right? The red dot is our forecasted values from economists. So we have seen inflation coming in a little bit softer than expectations, but still nonetheless, the direction is up on inflation, moving away from that target inflation rate that the Fed has often quoted is their ultimate goal. We can also see it in the PCE data, which is one of the Fed's preferred measurements of inflation. We came down a long ways and then we went sideways, and it seems like now we've actually ticked up a little bit. So this is problematic, especially when we start to think, okay, so inflation's back on the rise and now the Fed is going to cut rates. And for this simple combination, the Edge Finder determined gold and silver look really bullish. In fact, the Edge Finder's score history chart allows us to look back at what the Edge Finder first determined as a bullish period to get involved on gold. We did get a little bit of a bullish rating here. You can see anything above a 5 score in the Edge Finder is considered bullish, but we really got a stable call for bullishness, both in, let's see, where was this? This was July, about July 19th, and as early as August 5th, August 7th. So let's go look at those two times. Okay, so I've marked up visually the two spots where we did get an Edge Finder bullish signal. It was back on that Friday, July 18th, July 19th. On Saturday, we did get the bullish signal for Monday. And then of course, on that August 5th, we did get the bullish rating. And so you can see the Edge Finder forecasted that we could have upside in gold based on the economic data that we just got done discussing. And you may be wondering, well, how did it know? Well, it looked at economic data. That is why the Edge Finder is a powerful tool. It's looking at economic data and trying to make a forecast or a best guess, if you will, on where things could go based on what the inflation metrics and the employment data, interest rates, growth metrics, etc. are suggesting. And by the way, they still are getting bullish readings within the Edge Finder. And of the two, I preferred actually going long silver. Here's my P&L on the trade. We're up at this point just about $17,000, which is an insane move. I wish I had more trades like this. And of course, full context, not every trade that I take looks like this. There's a lot of times where I give back profits and where things don't work very well. It's part of trading, but we did catch a really good one. Price pulled back to support. I was able to get long, and I've been trailing my stop loss since then, thanks to the help of the Edge Finder for spotting this opportunity. And the Edge Finder for a limited time is on super sale right now. You can get access for 40% off for a limited time. And by the way, it is a one-time payment to get access to the Edge Finder. You pay once, you get access to our tools, and you can start screening markets for fundamental, sentiment, and technical data throughout your day and trading week. Don't miss a chance to get a huge discount on the tool. And if you send us a direct message using the first link in the description down below, you can get 45% off. We do an extra little bit of a discount and encourage people to chat with us directly so that we can answer any questions you might have about the tool prior to your purchase. Additionally, if you need a payment plan or you need to split the cost up so that it is more accessible to you at your current budget, then take advantage of sending a direct message to our team who can help work out a plan that works for you. Don't miss your chance to pick up a copy of the Edge Finder while it's on super sale. Now back to the video. So back to the starting question of the video, what do we do with gold and silver if you're not in a move, right? So if you're just looking at silver prices and gold, we already discussed that clearly gold, especially when we look at the daily and weekly chart, is looking severely overbought. But we've also established that just because something is overbought does not mean that it needs to reverse course in the meantime. In fact, we could stay overbought for longer and continue our march higher without much of a pullback. And I have been getting this question constantly on my channel over the weekend, which is, what do we do with gold prices? Is this a buy? Do we sell this move? Do we hold on? And let's go through them. Should we buy the price of gold because it just keeps going up every single day? Well, logically, if we were to try and form a trade plan around buying gold here, we run into problems pretty quick. If I was to set a buy right here at this current level, where could I logically put a stop loss? Logically, we had a little bit of a pullback here that maybe we could use as kind of our support gauge, but I think that's a little bit of a stretch. The challenge with putting a stop loss somewhere is that really the only clear level of past resistance or support that we could use on the daily chart is way down here. You're talking about a ginormous move on gold that we would need to risk just to get long at these levels. And you don't really have any sort of short-term target because, again, we are at all-time highs. So there's no like level to target in terms of a take profit either. So buying just makes no sense at these levels for me. Well, what about shorting? Should we get short this move? Because clearly it's overbought and it has to come down now, right? Well, we just got done establishing our mini backtest. When gold is in a strong uptrend, overbought readings can turn into more overbought readings. And so there is, to me, no justification for shorting this market. And so again, because we don't know where this thing is going, we don't have any sort of key resistance or structural levels to look at. So where would we even put a stop loss, right? We don't have any idea to put, a stop loss, and you may target this move here. But again, when something is in motion, it tends to stay in motion. Newton's first law of motion, also called the law of inertia, states that an object at rest will remain at rest, and an object in motion will stay in motion with the same speed and in the same direction, unless it is acted upon by an unbalanced or net external force. So when we look at gold prices here, there's not really a solid basis or reasoning that I have to say I think gold is going to drop hard from here. In fact, the fundamentals lean strongly bullish. Not to mention, there is a graveyard of traders who have tried to short all-time highs in gold, and it has been a very bad trade the last few years to try and short a major breakout in gold prices. So I can't buy it. I can't sell it. If I'm in the trade, I can clearly hold it, which is what I think we should do. But what if you're not in a move at all? So if you're not in the move, all you can do is side bow. I'm just kidding. All we can do is wait and we can wait for pullbacks, for opportunities, but that's all we can do. If you're not in the move and you're watching and you're painfully feeling that FOMO feeling, then you're not alone. A lot of people are not in the move, and I'm not in all of the moves all the time either, right? None of us catch everything perfectly, and unfortunately, all we can do is wait. There is no justification in my view for buying, for selling, and if you're in the move, which I'm not in gold, but I'm in silver, that's the only logical thing if I'm in the trade, is to hold on and to trail stops. And yes, I know it's a sales pitch. The Edge Finder is a product that I sell shamelessly in all of my videos because it's a great tool. It's worth every penny. And you should have tools that help to prepare you for the next big moves that are potentially coming in markets. So don't forget, take advantage of that 40% off discount down below in the description. Taking a look at the stock indices, we are back towards all-time highs. This seems to be a pattern with NFP reports. You get a poor jobs number, stock market sells off, and then by Monday we are back up. We'll see if that pattern continues like it did over here the last time we had a bad NFP report. Monday completely bullish engulfing candled that thing, and we just kept going higher. So if you've been watching my videos, then you know it's not a surprise that I'm pretty neutral or even slightly bearish on stocks right now. But because the technical uptrend is in an uptrend, I'm practicing what I preach, which is I can't short this market. For me to get short on the S&P 500, I would need to see clear evidence that price agrees with my fundamental outlook. Ultimately, I like to combine both fundamental analysis and technical analysis or price action. I've filtered the top setups page for just the US dollar pairs and metals, and we get an interesting setup here with the Australian dollar also coming in at a +7 score. Let's take a look at it. The Australian dollar is sitting at the top end of this resistance range. We can see we've been in consolidation here. So my first response is we're probably going to see a little bit of selling just in this area because again, we've been consolidating. However, if we can break through these highs, that to me signals we may get a nice run to the upside. Of course, the Australian dollar oftentimes is associated with the price of metals because it is a commodities exporting country big time. So price of precious metals and industrial metals in general can oftentimes be correlated to the Australian dollar. So we'll see if we can get a breakout through these highs. If so, you may get a break and retest opportunity to the long side that I like here for the Australian dollar. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA regulated broker offering Forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speeds and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all three of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Black Bull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Black Bull to see if it's a right fit for you. Now back to the video. The euro dollar is also making a bit of a breakout here. Looks like it's making a push back towards that 118 level. Pound dollar is back up towards the top end of this range. I took a profit last week on this one. I went long this area of support and closed out as we neared this past resistance point. Dollar yen is still chopping back and forth here. And the dollar Swiss franc is actually making a push lower here. If we do see a break through these lows around the 7,900 level, that would be the first low that we've made in quite some time. We've been really stuck in a range on this currency pair. Path of least resistance on the dollar crosses for me right now is favoring dollar bearishness. Here's a look at the DXY, or the dollar index. You can see we are testing that idea that we talked about over the weekend, this break of support around the 97.50 level. Let's see if we can get a closure below. If so, I do think the path of least resistance for the dollar is a push back down to those prior lows around 96.55. You've got momentum here, you've got lower highs. I think sellers are still in control here. And I've talked about some of my winners, so let's also talk about a trade that's not going very well for me. It's my Bitcoin short position. I did short this one on a retest into this area. I thought we were going to roll over. We had a little bit of a bearish engulfing candle forming on the 4-hour chart that ultimately fizzled out. And so this trade might not work out. If we do break through this 111 or 112 area of resistance, I'm going to take a loss on this one and move on to the next. But I do think we still have downside potential, and I do favor a little bit more risk off moves in markets at this time. This is a bit of a hedge to the many stocks that I have sitting in my portfolio right now. TLT breaking highs here, which is really strong, showing yields are again lower. This is rising expectations that the Fed is likely to cut interest rates. This is probably the same reason why metals are up today. And I do have a bullish position on TLT, up about $900 on these puts that I actually shorted. Remember that when you buy a put, you want the market to go down. When you short a put, you want the market to go up and collect a premium for selling that option. If you want to learn more about options, I have a second YouTube channel called Trader Nick Stocks, where you can explore videos where I'm talking about individual stocks and options trades that I'm placing. The portfolio is actually hitting an all-time high here today, which is awesome, but I continue to play defense when it comes to stocks. I do still think that there is limited upside, and the path of least resistance for me is to stay long the metals where I see price momentum, where I see the fundamentals making more sense. And so that is kind of my overall outlook. I'm a little bit more risk off. Here's the Bitcoin to gold ratio. You can see markets are actually favoring gold over Bitcoin pretty steadily right now, with our moving average trending down decisively now, showing there is a huge preference to not necessarily short Bitcoin, but move more into gold, which is considered more of a quote unquote safe asset. Interestingly, the S&P 500's put to call ratio, which measures the amount of calls versus puts being bought or sold on the market, we saw a huge preference towards calls recently. So people are definitely feeling pretty bullish on the markets, at least through the options exchange ratio. Although investor sentiment surveys still show a good bit of bearishness out there, this is part of the reason why I am not interested in shorting the markets, is because you still have some bears on the sideline. And if there is a run through the highs, they could capitulate, and that could be forced buying, right? So if all these people who are short or bearish decide to throw in the towel and get bullish, you could have a continued melt up in stocks. So that's just why I'm just avoiding shorting them altogether. Not to mention, technicals continue to be bullish. If you enjoy my videos, consider hitting the subscribe button. I thank you very much for listening to my commentary, and I do wish you the very best in your trading. See you next time. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.